It's funny because when you're talking about Tesla, all of the products that you mentioned do not currently exist. The price to earnings ratio on Palantir is like galactic levels. It's always made me super nervous because they are a hyper growth company, but you're also paying out the wazoo. It's always like more responsible when there is these stocks that are so volatile to not really go all in. I'm really happy that you have those ETFs to help balance out the individual positions. You probably wouldn't find that in my portfolio, I'll say.
Hey Alex, how you doing?
I'm doing great, James. How you doing?
I'm doing well. Thanks for asking. You ready to talk stocks?
Yes, I think the right question is, are you ready to reveal your stocks?
Yes. I am. I'm nervous, but I'm excited to hear your thoughts. And what we're doing is continuing our deep dive of season 2. So today we want to look at my growth portfolio that I've built since you've launched Alex Talk Stocks.
Great.
Yeah, I'm excited. So, a couple quick notes for our listeners, please. This is not investment advice for your specific portfolio. Alex is just reviewing mine. We encourage you to do your own research. First off, we are going to look at the growth portfolio, which is about almost 50% ETFs
Great.
and the rest in individual stocks. And this little portfolio I built is separate from my 401k and my retirement funds that I've been investing in through my employer over the last couple decades. This is a carve out where I was and willing to take on a little bit more risk and go for the moon, if you will. All right, so what we're looking at here is the ETFs that I chose, and I'll just kind of work down in order. But really, the reason I was trying to pick some of these based on some of your feedback from your video. In fact, you have a great AI stock video that I gleaned some of this from that you'll see in some of my individual stocks that you filmed about, 5, 6 months ago, which was super helpful for me. I encourage listeners, viewers, not only to like and subscribe to stay up with content, but also go check out some of those AI specific videos. But talking about the ETFs here, so, I really wanted to leverage ETFs as an investment tool, but also be able to ride and be defensive against the lows and just kind of market chaos and fluctuations. So, first one, QQQM, NASDAQ 100. I liked this versus the real popular QQQ ETF because it's got a lower fee, but it has a pretty good coverage of the largest non-financial domestic and international companies listed on the NASDAQ. As you see here, I have the biggest portion of my allocation in the ETFs here at almost 30%. And right now, 4 or 5 months in, it's trending at about 7.2% profit. Thoughts?
Yeah, I mean, this is one of my favorites. This one basically directly follows the NASDAQ, which is great. NASDAQ, has pretty much continuously outperformed the S&P 500 because it is tech heavy. So I'm a big fan of that. I love the low expense ratios. This looks like the most expensive one you have, but it's still really low when it comes to expense ratios. And so I think this is a great start if we're getting into an ETF.
The second one is the Schwab US Dividend Equity ETF, which tracks the Dow Jones Dividend 100 Index. And one of the reasons I liked this one is these are companies that provide a dividend. So this, in my mind, acts as a little bit of a defensive anchor for my portfolio. And as well, as you see here, it's got a pretty low expense ratio of 0.06%, and about 17% of my allocation, been doing pretty well at almost 15% growth.
Yeah, this is the perfect kind of stock for the environment, or perfect type of ETF that for this kind of environment right now. It's much more of a defensive play. I would say QQQM is more aggressive, but this is a nice counter to that because it is more stable companies that have a guaranteed payment. And this is where investors move their money to during times of tribulations and war. So that's why it really has outperformed. I think this has been a great one. It looks like it's the second lowest in your allocation. So there could be room to maybe mess with that a little bit and move it up a little bit more if you'd want. But I think this is a great play. I love the low fees, and the dividends that this one pays out are fantastic.
Yeah, and you bring up a good point. Like, since I really started putting a lot of energy and focus into this portfolio that we're covering, the market's been wild. It's been some days, I think a month or two back, the Dow hit 50,000, and then it's been down and it's been up. And so, just a quick reminder, this is just the snapshot, at the time of recording. But, fast forward another week, it could be a completely negative story with
Right.
everything in the red. So hopefully it continues. All right, the next one is VTI, and this is the Vanguard Total Stock Market ETF, and it's pretty broad coverage, like literally the whole market. It's got over 3,500 holdings in it, including large, mid, and small cap stocks. And really, I just liked that it had an additionally low fee structure, and it's kind of like the whole market. So as long as the whole market's going up, I think this is pretty safe. But curious your thoughts there if you agree with that.
Yeah, this is the classic, right? This is the classic total market. And this one's great. This one should be a staple for most people's portfolio. This one or the next one you're going to be talking about are kind of like the staple go-to ones. And it's funny that you can see here you've got most of your money in it. I think that that's a great allocation percentage there. That it really acts as that true anchor to kind of offset some of the big growth stocks we might be talking about here soon. And when you look at it, like I mentioned before, the QQQM is a little bit more of an aggressive one because it's tech heavy. You can see it's barely outpaced the total market in the snapshot. So again, we really overthink things a lot of times with investing. Like the total market is really a great approach a lot of times. So this is a fantastic one.
So then this last one is the SPYM State Street SPDR portfolio of the S&P 500. That's a mouthful there as a name, but it basically covers the top 500 largest publicly traded companies. And I liked this one not only for the coverage, but also its low expense ratio fee there at 0.02%. And it's not been doing as well as the SCHD, but coming in at this moment at 6.67%.
A lot of the stocks that fall in SPYM will also be in VTI. They can also be in QQM. So we really start overlapping. So even though it is performing a little bit differently and the fees are slightly different, it's still a fantastic one. And it's another one that I would always recommend for people. But I would come back and question, do you really need that and VTI? I tend to just, pick one of those two because they're going to perform, pretty similarly, and kind of splitting things up is almost like overdoing it in some ways. So something to consider for the future. So nothing wrong with it, but just thinking about allocation moving forward, that could be something that you could think about adjusting.
What is your thought there? Because the cost is quite different, even though there's overlap there. And that was a little bit interesting. Is it just because the amount of companies in it versus the other one?
Yeah. So again, just remembering that the price of any of these things is going to be a ratio of how many shares of it are existing. So if there's fewer shares, it's going to drive things up in price. So there's probably just way more shares of SPYM available, and that's why it's a lower price. But again, I don't want people getting caught up on the price of things because I don't have to buy these in full shares. I can buy them in partial, and I can just do whatever dollars I have. I can put $50 into either of them, and it doesn't really matter. So again, trying to disconnect. I wouldn't get too caught up on the price of stock of these stocks or any ETFs like that. The main focus should be on the expense ratios, which I think you've done a nice job of picking ones that are low.
Okay, cool. Well, next, here's where I'm a little bit nervous as we review some of the individual stocks I picked and just a little bit of background of why I picked some of these. Again, with the explosion of I feel, and this is just my opinion, but it seems like it'd be a great time as that technology is advancing to get in as early as I could get in and start investing in these
Yep.
companies that could theoretically have a huge explosion of value and in the market, but also just in hopefully improving our lives and leveraging technology. I already leverage AI at work and in my own use for research and all kinds of things. So I wanted to start investing in it. So this portfolio of individual stocks is really based on leveraging companies around that.
Okay. Makes sense.
Yeah. So, all right, here we go. Let me get that slide up for you, and then we could take a look here. All right. So here we are looking at my stock mix with my growth/AI portfolio. And if you like, we could go through these one by one. As you can see, I have AMAT, TSM, AMD, Amazon, Tesla, Palantir, Qualcomm, CoreWeave, Intel, and Nvidia.
Yeah. So this is great. Should be lots to talk about. The good news is you have passed the first test, and that is you don't have too many positions. So that's great. Because if you get too many stocks, there's no way, if you have a real job, that you can't just sit it there and research stocks all day. There, you can't, if you the number gets too big, there's too many stocks to research, you can't keep up with them all. So that's why I always recommend 5 to 10. Looks like we're right there on that fringe on 10, which is fine. So I'm glad to see that we don't have too many things to review.
This first one, AMAT, actually wasn't one of those you listed, but through learning about AI and some of the companies, I specifically liked AMAT, which is Applied Materials. They're an American company.
Yeah.
I appreciated that. And their supplies, equipment, services, and software for the manufacture of the semiconductor chips that are obviously used a lot in AI. And that's their work. So for me, it was kind of like, okay, these companies are, they may not be the AI companies, like ChatGPT or something, but they are critically important in powering that. So I felt like this was a good one to
There
add to
is.
my
It truly is.
portfolio.
Yeah, I think Applied Materials fits in the bucket of that ground level AI company that, they're not just AI, but they're kind of leaning in to AI right now. And that's why you can see their stock has been up so much. They've been really profiting from the AI push. But I really like them because I really want companies that are on the cutting edge of AI and they're making the components that every company really needs to use. So Applied Materials definitely fits within that bucket. And you can see that they've done really fantastic for how long you've owned them. So I think that's a great place to start there.
Yeah, this one, I think my timing was the most fortuitous when I entered
Mm,
in. And obviously, with dollar cost averaging, if you're investing regularly, you you can capitalize on some of the lows, and then some of the mid range, and then maybe even some at the high. But overall, usually per that advice, you're doing pretty well. But this one, I had the best timing on, and so as you can see, it's already grown,
yeah,
80%.
it's pretty amazing.
At the moment of this snapshot, any of that can change, as you know. The other thing I like about this is, it doesn't have a big dividend, but it has a little bit of a dividend.
Yeah, we'll take anything. Yeah, we love it.
And we explain a little bit of how dividends work and what they are in that last video, but it's always nice to get a small kickback um, from the company to the investors. Hey, it's more than Nvidia down there with 0.02 or whatever it is.
That's right.
So
Yeah.
that's AMAT. I'm glad you like that one. The next one is Taiwan Semiconductor Manufacturing Company on the exchange as TSM. This one is about almost 18% of my stock allocation, and it's been doing pretty well. Any thoughts here with TSM?
Yeah, I mean, TSM is one of my favorite companies. If you go back and look at and watch some of my videos, there's a video I have specifically on my favorite ideas for 2026. And I don't want to spoil where it is on the list, but it is on the list. And so it's easily one of my favorite companies. They're the ones at the very bare level that every chip that is important in the world is basically coming from them. And so if you need chips and if you're going to run with AI, TSM is going to win. So I think this is amazing. I'm glad to see that they're a big portion of your allocation as well, and you're kind of making a big bet there. This is probably my favorite position you have in the portfolio.
Yeah, in fact, it's in that video as well as you call out that they make, I think, almost 60% of the world's chips.
Yeah, because they not only make AI chips, they make phone chips. It's like all kinds. Anything you think needs chips, they can pretty much help you with on things.
So, in part to that video of AI top stocks that you had published, I made sure to include TSM. The next one that was also in your video, and this is AMD. And the reason I liked AMD and Nvidia for that matter, but I grew up as a gamer. I used to build my own PC rigs, and it was either Intel or AMD for the
Yeah.
processor, and then AMD came out hot competing against Intel. And then, of course, Nvidia with the GPU
Yeah.
chips and then all the video cards. So I'm familiar with these two companies. So it was an easy decision to add AMD to this portfolio, though they only represent a fraction of what Nvidia does. But I think they're still important and still gonna benefit from the focus in AI. So I added AMD.
I believe in AMD long term for sure. I think that they have been on a crazy run recently. You know, you've been able to capture a really nice chunk of growth from when they've really pulled back recently, but they've been on a huge run. They're trading near all time highs. I think we're starting to see a little bit of momentum coming back, and like, do our CPUs making a comeback? This is the question that's been coming up of like, how can they help with AI? I think Intel's been benefiting from that as well. So AMD is a great stock. I don't believe in them as much as Nvidia, just purely because Nvidia has such a huge lead. But maybe the upside is bigger for AMD because they're just not a $4 trillion valued company. They have more, room to grow from there. So I'm a big believer in AMD long term. I think their stock is a little bit more expensive than Nvidia, but definitely think that there's room that you need two chip makers. It's not going to just be Nvidia's world. AMD is going to get their own chunk for sure.
Yeah, and it was actually when I got them. What was interesting is in the same quarter, they had good earnings reports. Nvidia had a great earnings report. The same day, there was news that they just partnered with Meta, I think, and Meta committed like 20 billion.
Mm,
And it was like great report, great news, and then the stock pulled back like 8% right after I bought it, and I was like, what in the world just happened? But I think it's just the nature of this market and the volatility with AI. And is there an AI bubble
right.
or is there not? But really, in the last month or two, it's pulled or it's made these gains. So I'm encouraged. Part of me is like, I wish I had more.
I think everybody says that, and that's why we also think long term. This short term war issues and all the other issues that we're dealing with, politically and macro, they are just blips in time. So I think we'll look back and be like, wow, that we really should have bought more at that point.
Exactly. So that's AMD. The next one,
Okay.
Amazon. I think for the average person, they may not think Amazon and think AI, but through my research, Amazon is obviously investing a lot in building out AI infrastructure. You think of AWS cloud services and powering AI and all of those things. Even
Right.
though I think Amazon has more going for it than just AI, it fit nicely into this portfolio because with AWS and the cloud, they're doing a lot there. And so I don't have it as much. It's only about 12%, but so
Yep.
far, especially in the last couple of months, it's grown and increased in value. So what am I at now? 20%.
Yeah. That's a great gain. And I like this position because we're starting to get a little bit less concentrated in just pure AI, because Amazon has a gigantic e-com business. They're one of the largest retailers in the world, and they continue to grow. And I think it's helpful to be differentiated in your portfolio. Like, you don't want to be super AI all the way, even though we're really leaning in AI. It's nice to have a little bit of differentiation because Amazon stock is consumer discretionary, so it's going to behave a little bit different than the rest of the tech stocks that you have. And I think they're on the upswing right now. The cloud services are a huge profit driver for them, and I think this will be one that you'll be thankful that you got into. So I think the 12% makes sense for the allocation too. So this is a good position.
So that's Amazon. And then this next one's been tough
It's the red
because
spot on the page.
it's my red. Yeah, and Tesla, I think
Yep.
they've now expanded into, obviously leveraging AI. When you think about autonomous cars, you think of the focus on robots. And then when you think of even beyond Tesla, you have SpaceX and what they're planning to do to help AI in space with, server farms in space. All that, I have my eye on what's happening with Elon Musk's company. So, I have a small investment in Tesla. Now, the timing was a little bit unfortunate for me because I just got in when it was near peak price, but I wanted to get in, and then the market has just been a little bit difficult for Tesla in the last
It has been.
3, 4 months. And so this is one that I'm actually in the red on currently. You never know next week or, with news and sentiment that could change. What's your thoughts on Tesla?
Yeah. So again, I like that it's a little bit differentiated than the rest of the portfolio. So I think that's good. It's funny because when you're talking about Tesla, all of the products that you mentioned do not currently exist other than the cars. That's what's so
Right.
funny about Tesla stock. You are truly betting on Elon and you are truly betting on the future. And databases in space seem like an impossibility. And if they pull that off, that will be huge. And that will definitely send the stock up massively. So it's going to be easily one of the most volatile stocks you have in your portfolio. I was a longtime Tesla shareholder for a very long time. I have a very big love-hate relationship with Elon and his ability to go and share his thoughts on Twitter. And so I'm right there with you. I think that they have huge upside, but as you kind of seen, you just have to prepare for that downside with them as well. But it sounds like
Yeah.
you've already kind of mentally dealt with that. And like I said, I like that it's different than just the pure AI play that you have.
It's a little annoying in the sense that the stock is pretty expensive, at least,
It is an expensive one.
comparatively. So then it's like, all right, I guess you're really, but again, to your point, you don't have to buy a whole share.
Yeah,
So I got to keep reminding myself
that's right.
that. So that's Tesla. The next one is Palantir. They're a software company, so it's a little bit of a diversification within this AI portfolio, but they leverage AI in their business a lot. And obviously, they're in the news a lot, controversial.
Yeah.
But so I put a small investment into Palantir. Any thoughts here?
I think it's another one that I like because it's different than what you have going. They're kind of on the end of AI, right? Like they are using the chips to make a software to then sell that in. So they're actually selling a software instead of being the people making the things behind the scenes. So they're kind of further down the supply chain, if you will. So that's a nice differentiation versus the rest of your portfolio. And they're also in a different industry too. They've been in the news a lot, like we've talked about. And I mean, it sounds like they're going to be major within the government, which, the price to earnings ratio on Palantir is like galactic levels. It's always made me super nervous because they are a hyper growth company, but you're also paying out the wazoo for a hyper growth company. So they need to grow fast. But with the backing of the government, they do have a big runway from there. So again, you haven't put a ton in this. So again, I think it's a great way to kind of differentiate from the rest of your stocks.
There's some wild swings on this in the last 4 months
Yeah, it's
too.
between
And
this
so,
one and Tesla. That's a roller coaster with those two right there.
yeah, 100%. Next one, Qualcomm. Most people know them because they do the chips within smartphones, but they've done a lot in the last couple years to refocus, um, strengthen their fundamentals. The stock had gone down quite a
Yep.
bit, and when I was researching and looking for companies, this one popped in on my radar because not only do I know them, but they were at a really attractive price given everything I mentioned. Started getting involved in AI as well and restructuring for that. So I think their valuation doesn't reflect that yet, but I felt like it was a good buy, a good opportunity. I'm familiar with them, and they've done a lot of work over the last year or two, and so I added it to my portfolio.
Yeah, what's nice about this again is that you're kind of in the chip sector, but you're not in specifically AI chips. They have a massive phone business, and you can kind of see that they have pretty good cash flow because they pay a fantastic dividend at that 2 something percent. So that's really nice. Like the dividend like that size can really add up. And especially as you reinvest that dividend, that'll be great. I think the idea of them being a value play is kind of showing in the performance you've had so far. You've got lots of double digit gainers and they're kind of lagging a little bit behind. And it's just because they're just not quite positioned. They're just trying to tell an AI story, I feel like, versus like being a true AI company. And I know they have the Snapdragon processor and they're trying to get AI into phones. And I think if they get that traction going, I think you're right there that, there's definitely going to be some upside to them. Uh, I'm not a huge fan of the mobile business, just personally. I just think there's a lot of competition. You can be tied into if Apple's phones are doing well or not. So if I'm being honest, it's probably my like least favorite position that you have. But I also like that it's differentiated. And again, you probably know the company better than I do. You've probably researched it more than I do. And as long as you've done the right research and you believe in it, that's why you start the position there. So again, no issues with it, but you probably wouldn't find that in my portfolio, I'll say.
Yeah, that's fair. The CEO does talk about that they are really going to be a big player on edge AI. That was part of the reason as well, but you're right. They're kind of early as a brand name when you talk about AI. So I'm hoping
Mhm.
that, they go gangbusters and it actually, I could have one that you add to your list and.
Yeah. And I mean, this is exactly why people should subscribe to the channel because not only are we reviewing this portfolio one time, we're going to track this over time. So we'll see. We'll make sure Qualcomm is starred for next review to see how it's doing.
Well, now you're putting me on the spot. Yeah, who knows? I mean, maybe when we do it again, everything's going to be in the red, depending on what's going on
That
with
is true.
everything in Iran or geopolitics. But
Yeah.
we'll see. All right. Anyways, moving on, we have another one that you recommended in your AI Top Stocks video, and that is CoreWeave. And CoreWeave is AI cloud infrastructure. They have these big locations where they bring in Nvidia chips and they're helping companies train their AI models and such. Obviously, a bit. They've had a roller coaster ride when they came out in the market. It jumped real high and then it went real low, and I was able to kind of pick some core weave up in the middle, but
Right.
you know, don't have too much. They're about 5.5% of my AI portfolio, but again, looking at a 51% growth, I wish I had more.
Yeah, and again, it's always like more responsible when there is these stocks that are so volatile to not really go all in because you could easily be down 51% in CoreWeave. That stock has moved so much. And so it's always important to remember that it feels good when it's green, but it feels way worse when it's red for that number. But I'm a big fan of CoreWeave because I really think this neo cloud approach of having dedicated clouds for AI is brilliant. And they have really good scale. They've signed massive agreements with all of the major cloud companies, basically. And they're really well positioned. They're growing like gangbusters. Their only risk is their debt. They're in that early build my company mode. And so they're taking a lot of debt on. So if they can get past the debt and start turning a profit, they will be set up really well. So I'm a big fan of CoreWeave, and I also like that you didn't go super all in on them, and it's just like a smaller portion. I think it's a good idea.
That's fair. Okay, so that's Core Weave. And then I mentioned it earlier, but Intel, another CPU chip manufacturing company that long time known brand. Yeah, in fact, they just partnered with SpaceX and Tesla to help build out the Terafab project, and so I got them on a dip. They were an attractive price. They're a known company. I don't think they're going away, so I picked them up, and as you can see, I picked them up at a good time as the stock has gone up since I got it at 44.44. So hopefully they continue and they make inroads.
Yeah, Intel is one of those companies that I was out of Intel for a long time. I'm like, nope, not dealing with Intel. AMD is taking all this share. Nvidia's chips are way better, and I was kind of like, I want nothing to do with Intel. But now that the government is invested in them, Nvidia has made a massive bet on them. We're starting to see the CPU being more involved with AI. I mean, they've got great momentum. That stock has taken off. They traded a really expensive valuation if you look at price to earnings, But I think it's because people have confidence that with those kind of backers that they're going to be doing well and continuing to gain some share back. So again, it's a smaller portion of your portfolio. They're not one of my favorite companies, but I totally believe in them because of the backers that they have from there. So I think it's a good position.
And this last one, as I joke and say, I think this is your favorite company to invest in.
Could be.
It's fun. We just did the recent video we did looking at stock measures and all of those KPIs, and used Nvidia as kind of our case study. So I learned a lot
Yep.
about Nvidia, but unfortunately, I don't have a big portion of my allocation there, though I may definitely increase that. I think the issue that I had was timing. So when I first picked up a share was towards its peak, and then they had all these great, earnings reports, but the stock wasn't moving at all and or down. And so, I know you talk about dollar cost
Mhm.
averaging, but I just decided, let me not go all in Nvidia yet, given the price point, and it was like near the top of it's ever been. So I didn't put as much in, and I kind of looked for better deals at the timing. But obviously, they're an amazing company. I just was, being a new investor, not wanting to buy something at its near highest price point. So that was probably the main reason. But as we know, it's grown even in the last month and continues to grow. You look at some analysts, have it much higher.
Yeah.
So I likely will invest more into it. I just, at the time, being new, I just didn't want to put, I wanted to diversify a little bit and not put it all in a very, top of its ever price point, so.
Yeah, that's fair. I mean, Nvidia is one of those companies that they kind of get penalized for being the largest company on the planet. And Apple was kind of in this position for a long time too, where they were trading at a really cheap valuation versus their growth just because they were the largest company on the planet. And Nvidia has continued to get doubts that they're going to be able to keep up their growth at their current size. So that's why you've kind of seen that stock kind of trading sideways to down for like pretty much 6 months. And then all of a sudden it's really taken off recently. But yeah, I mean, Nvidia is probably one of my favorite companies as well. They are just at the center of everything that we've talked about. All those industries that are working because of AI, they're basically working because of Nvidia. And that's why I'm such a huge believer in them. And one comment to make is, if you are interested in adding to Nvidia, there's an ETF out there, SMH, that is a perfect fit. And the reason why SMH works well is it has a lot of these stocks already in it. It has a lot of those chip stocks built into it. And so that way you don't have to feel like you missed out on one or your allocation was not correct. SMH lets you dabble in all of these. And that could be another one that you consider adding to the ETFs as well. So that way you're kind of like, I don't have to add more NVIDIA. I can just add SMH to my portfolio.
Yeah, that's fair. There's always this balance between the ETF and the individual stock, because you feel like, at least I feel maybe in my noob, early investor, you know, it's hard to make fast and quick gains, which obviously is counter to what we're doing with long term approach.
Right.
But I feel like with some of these stocks, that's what you're hoping to do, right? Is get some of the increases like we see on AMAT,
Yeah.
applied materials. That's the hope, at least, right? But in some ways, I look at this as, this is my AI portfolio.
If this wasn't a growth portfolio, I would obviously tell you like you've got way too much AI, right? Like if you didn't have like a really well-rounded 401k and you have your HSA and you have the other ETFs that can kind of help balance this out, this would be way too risky for someone just to have on in isolation. But the fact that you've chosen a growth area hyper focused in AI, I mean, the gains are clearly showing that it's working. You just have to be careful that when the market does really turn again, that if you're too allocated in AI and tech, it will pull back quicker than if you had more variety in the sectors that you're investing in. So that's something just to move forward is to consider, are there other sectors that I would want to add to this that I believe in as well that would kind of differentiate it a little bit?
Well, that's great feedback. And to that point, I'm wondering, is it ever, what's the right time to lock in profits or portions of your profits? Let's say AMAT goes 200%, 300%. Is there ever a right time to try to lock in some of those profits?
Yeah, so this is like the $1 million question right here. And I think every situation is really different when it comes to when is the right time to sell. I usually think about selling companies when my reason for buying them has changed. So if they report numbers that I wasn't expecting, or if something that I was expecting them to do, they say they're changing their path or they're changing their direction in a negative way, that's when I start thinking about selling. The other thing is if I feel like their valuation is getting ridiculously out of control and we're kind of in that nirvana stage with things is when I would start considering things as well. But most of the time, I don't really sell. Like I very, very rarely sell. I'm a huge believer in just holding things. And if you look over time, a lot of these stocks, if you hold them for multiple years, will all be green. And a lot of these could be really green if you hold them for a long time. So the only thing that if you want to do to be more safe is, for example, if Applied Materials was to 10x from here, and it's becoming a massive part of your portfolio, that starts getting a little bit too unsafe. And you might want to trim a little bit of that position to move it into something else just to make sure that your allocation isn't getting out of control. But if they're up huge because they continue to do really good results and they're just crushing it as a company, that's not a great reason to sell. If anything, that's why people are buying it and that's why the stock is going up. So again, it's kind of like a counterintuitive thing that most people don't think about. When the stock is crushing it, doesn't necessarily mean it's a time to sell. But on the flip side, if a stock is really going down, it doesn't necessarily mean it's the time to sell unless there's a really good reason. So I don't know if that actually answers the question or not, but it's really complicated. And really, did the thesis of why you bought the company change? That would be my takeaway for that.
Yeah, that's good feedback because if you look at it just from a pure profit perspective and just thinking about the money that you've made, versus looking at it like this is a company I invested in and the company's still doing well, you could get, distracted by the profits or the increases and say, I want to, what I referred to as, locking in those wins, if you will. But if it's
Mhm.
still on the same trajectory, you want more of that stock to then continue to grow, right, towards the end result of whatever you're investing in for.
Right.
And so, maybe thinking about that, that could be one of our next episodes, maybe not the next one, but I'd love to talk to you about, your purpose of investing. Why do you want money? Obviously, it's not for money's sake. What are your goals and how you,
It's a lot about money.
yeah, well, fair. But, money is a means, right? And so, um,
Yeah.
maybe we could carve out an episode talking about that, so we could, obviously we covered having an investor mindset and what that means. Now we're looking at this season a lot of the deep dives about stock measures, sectors, stock performance. But it might be good to do a pit stop in kind of the altruistic or the bigger rationale of, why we work, why we invest, why we save, some of those core principle fundamentals as it relates to money and investing.
Absolutely.
Alex, well, thanks for walking through my portfolio here. Overall, any final things to share? Feedback? What would you rate this? What? Any guidance? Any thoughts here?
I think that I like the approach overall. I'm really happy that you have those ETFs to help balance out the individual positions. I think that going in on AI is a great idea. And again, if you didn't have other things to help balance your portfolio, I would tell you like this is not good. This is way too risky. But the fact that your hyper growth stocks are like the right ones to own, I think it's a fantastic approach that you've taken. And when you look at the gains you've gotten so far, if those keep up, I mean, that's pretty amazing too. So we need to keep long term though. That's the main thing is that 80% gain can go right back down if the market swings too bad. So you never know what's going to happen.
Right, and I'm glad you mentioned that because really, including my 401k investments, and then this, which includes the ETFs, really are only about 20% of my total budget. I've kind of taken the approach, though I'm still working on reining some things in, trying to live off of 70% of my income, 20% for investing, and 10% for emergency fund savings for, all those things that happen, like, your air conditioner goes out or your microwave or whatever.
Right.
And so maybe I think it'd be great to deep dive some of those categories as well. But yes, this AI growth portfolio really is just a small percentage of my total investment, and where I feel like I can take a little bit more risk here with these AI stocks. So glad you mentioned that. I'm glad you're happy with some of them. Most of them came from some of your feedback and advice to me.
Might be part of the reason why I like it as well.
Yeah, exactly. And again, just a reminder, this is not direct advice for any viewers or listeners. But hopefully you gained something out of this. I encourage you to like and subscribe to catch more of our content. Alex, thanks for talking stocks today.
Till next time, we'll be tracking this.
Hopefully it'll be all green and all triple digit, rewards, but we'll see.
Well, the world will know soon.
All right. Talk to you soon.
We'll talk to you then.
Ciao.